The broadcast is now starting. All attendees are in listen-only mode.
Welcome to the webinar. And we'll jump in and take a look at the AbleTrend signals. Software paints a nice clear picture of what's happening in the market. For intraday trading, we combine 3 time frames into one chart. For longer term, we use 2 time frames, which works fine. And we get some really great trades lately. And of course, there's always going to be some losing trades too. Obviously, there's no perfect system. When the markets get choppy, there is nothing in the world that wins. Nobody in the world wins. However, with the no trade zones, when the time frames are not all in agreement, that's what is the big difference, because we have a lot less losing trades than other indicators and anybody else because of that. And that's what makes a big difference, because we don't get chopped up as bad. And that's not losing is just as important as winning. So let's jump in and take a look. Okay, so we've got the CRL chart up here, long-term chart, daily, weekly chart, stock trading. And this one's just been on a big-time move. You can see back over here, anybody who had the software back in June who uses the daily, weekly chart. By the way, I've changed the weekly to the AbleTrend TS indicator. I found that to just be just a tad more helpful. So you're going to use AbleTrend TS on the daily, AbleTrend TS on the weekly. So what does that come down to? It comes down, we only use AbleTrend TS on every time frame. It's much simpler that way. So keep it simple, AbleTrend TS on every time frame. And you can see we have a nice little buy signal that came in 2 days ago in WinTick. The WinTick report scans the market every night. It gives you all the new buy signals that came into the market that day, at the end of at the close, right about this time of the day. So you can see right here 2 days ago in the WinTick list, obviously a buy signal. You had the weekly agreement because you had the blue arrows, and we've had those for many months. And of course, we had the nice buy signal back over here at 330. It took that all the way up to 430, a 100-point winner. This is the classic no trade zone I talk about. No trade zone. When there's red and blue together, meaning red dots and blue arrows, just leave it alone. Just leave it alone. Move on to something else. It's too risky. And then 2 days ago, we had a nice little buy signal on. That worked out real well. Another one that came in a couple of days ago in WinTick was NUE. And this was last week. There's the blue bar with the big blue dot in the middle. See, we have from red dots to blue. There we go. That one's working out well. We got in at 106. And if you didn't get in that day, next day drop down, and you could get in at a better price. And now we're up to 110. So working well. And the previous signal, which was right here, that one worked out real well too. So I'm going to keep it simple. I'm just going to use AbleTrend TS on the daily and weeklies. And I think you'll find that helpful. In addition to this, what's really helpful is that Grace has been putting on the website all the new buy and sell signals. Well, not all, some of the new buy and sell signals that are coming into the market that day. So if we just jump on over to the website, ablesys.com, and of course the same thing as wintick.com. Let me do that here. Let me show you on the website. This might be real helpful for you, for longer-term traders. Here's the our main website, wintick.com, ablesys.com, same thing. You scroll down a little bit. You can see right over here it says trading signals. If you click on trading signals, we've been updating this every day. You just scroll down here. 1028 is today. 1027. So we get a bunch of new signals in right here. It kind of gives you a heads up on all the new buy signals. some of the new buy signals that came into the market. So we're just kind of giving that away for free just to be helpful. It's a good resource if you're looking to swing, or probably even better yet, position trade. Not everybody wants to be in front of their computer all day long. I totally understand that. So just scroll down here and you can click on stock charts. You can also go back and click on E-mini, and that'll give you, for example, like this was yesterday's E-mini chart. Yesterday was a really good day. This is the E-mini NASDAQ chart. This is the morning, and this is in Pacific time. I'm on Eastern, but this is done in the main office in Pacific time. See, time in PST. So in the morning, it looks like there was about 5 trades or so, four or five trades. In the morning was plus $700 for a one contract trade. And Jesse kind of outlines where the trades are. Here was the afternoon, and the afternoon was really good because the afternoon was about 2,100 profit for a one contract trader. So it was a good day yesterday. It was plus 2,800 per every one contract that you trade. So it really worked out well. Today was a little bit more, a little choppier, and unfortunately, not everybody can win when the market's choppy. I mean, if we could win, or anybody could win when the market's choppy, as well as win when it's trending, we'd have a perfect system. That's not possible. Expectations would be too unreasonable then. I wish that were true. It's not possible. Where we differentiate, or where we help, greatly help, is that when the market is choppy, we'll have dramatically less losing trades than the rest of the world, who are getting just completely destroyed. That's where we have the big edge. So let's go back into the E-minis here. And as I've been saying, you probably heard me been saying this for a couple of months now, the E-mini Russell has just been fantastic. It's been extremely profitable, day after day after day. Now, occasionally going to be a losing day. Count on it. I'm not here to fool anybody. I'll tell you like it is. That's why I show every winning trade and every losing trade. And that's a change compared to most everybody else. I don't like to show the losers. Well, then you're not being fair. I'll show it all. There's the mini NASDAQ. And again, when that first triple confirmation trade, here's a perfect example. Really long bar. Look how far it is from the red dot. In this case right here, it's like 40 points away. Well, there's no way in the world AbleTrend would ever suggest taking a 40-point stop, obviously. So what you do is you just put your stop 2 points above the top of the triple confirmation bar. That's a losing trade, and that's the first couple of minutes of the market. I like to give it a little time to, just give it, 5 minutes or so. Unless the bars are short. If the bars are short at the 9:30 New York Open, then it's okay to jump into the trade. But look how long this bar is. I mean, this is a joke. This is a 35-point bar. The longer the bar, the more the risk. See here, nice short bar. Still pretty far from the dot, further than I'd like. I'd like to be within 20 points. If it's more than 20 points away, you put your stop 2 points below the bottom of that first blue bar. Be right there. So instead of getting stopped out here, which would be the normal place, second lower row of blue dots below the price, now we're getting stopped out there. Ooh, that's a lot more manageable. We can live with that. We can live with a 10-point stop, versus a 25-point stop. That's just too much. 20 or more points, over 20 points, it's just too far away to put your stop there. You got to take the trade because nobody knows what's going to happen. But you just put your stop a little, much tighter on the bottom of the blue triple confirmation bar. That's it. Okay, now we're stopped out there, obviously, and there's your sweet spot. The sweet spot is the first blue bar after the price touches the blue dots. So right over here, we're back in again, right in about 690. Obviously, we have the 2 minute, 3 minute, and 1 minute, all blue, so we're all in agreement. Here's your 2 green bar stop after you're at least 10 points in profit. And right in here, we're going to get stopped out. But we're in at 690. We get stopped out at 730. That was a 40-point winner. So 40 points if you're a one-lot trader, that'd be 800. Here's what I'm talking about, where the choppiness and these no trade zones that keep us out of trouble. Look at this year. Anybody trading during that mess, and I mean that's just one big mess, would just get killed, just as we would too. We stayed out of that whole mess right over there for about 20 minutes. We were in a very accurate no trade zone because we caught these three algorithms and three different three indicators and three different time frames combined into one. That really helps. Now you got a trade right here. Well, that's about a break even. Small window. Let's call it a break even. Trade right there. Second lower row of blue dots stopped out. Small. Maybe a 1 or 2 point loss there. Let's call it a break even. Again, here's that long bar. There's one of those long bars I talk about. Hate those because the longer the bar, the more the risk. They don't always work out. They often don't work out. But we're going to put the stop. We don't know that at the time. We're going to put the stop right there. And then, of course, blue bar takes us out. And we lost about 5 or 6 points on that trade. Again, look at this no trade zone here. Look how this kept us out of trouble. It's so important. There's your triple confirmations. Actually, it's right there. There's your, because we had the red was on a 3 minute was on a sell signal. There's the 2 minute. Had the 1 minute since here. 10 minutes or so before. Doesn't look good right there. Pretty nice. Yes, true, I am. I'm working on a sweet spot. I'm working on an indicator to help us to stay out of some of the sweet spots, because a lot of them have been false or haven't worked out. Why? Well, the VIX is below 20. Anytime the VIX is below 20, as I say, it's more difficult to win on days like that. The lower the VIX, and it's right around 15-ish, the harder it is for the world to win on that day trading. Now, it doesn't mean you're not going to have a winning day. It just means it's going to be a lot more difficult, or it's going to be a lot choppier when the VIX is 15 than it would be if it was 20 or 22, or anything over 20 is great. You definitely want to be trading on those days. But yeah, I am working on something that I'm liking a lot, and I'm just waiting for clearance to be able to broadcast it or show everyone, because obviously it's going out to thousands of people trading, collectively trading millions of dollars. So that's why we're very conservative and very careful here. But yes, it's been very helpful. I like it. Nothing's perfect, but it's definitely been very helpful. And it's real simple too. So I think by next webinar, certainly next week, either Tuesday or Thursday, probably on Thursday, because this is the webinar that's just for users. Tuesday it's open to everybody. And I'm always hesitant to introduce anything new because I get literally thousands of questions. A lot of people just have different skill levels and different intelligence levels, trading intelligence levels, and we get many new people and new traders, and sometimes it takes them a long time to understand something, and I totally get that. When I get something new, it takes me a while too. So totally get that. But I just want to make sure. For example, well, here's the sell signal, obvious. Another winner. There's the 2 greens. Stop out a couple of minutes later. So we had another winner right there, and the key is you gotta take the winners. You got to get in all these trades, and you got to stay in the trade. You need to pick up these big winners because every day is going to be, it's going to be some smaller losing trades. I mean, that's a guarantee. If you did sweet spot here, which was a break even. So the morning was real good. Obviously, up quite a bit of money. 800 on the one trade. I gave back a couple of hundred on a few other trades. This was a winner right here. If you're just going by points, if you just trade small, like micros, and at 732, out at 709, so that's another 23 points. Yeah, we'll only make it 20. For one lot trader, that's 400. picked up 800 on the earlier trade and gave back a few hundred on a couple of the trades. So still up a ton of money yesterday. I mean, $2,800 a day for a one lot trader. That really, I mean, that holds you over for a bunch of losing days if that happens. You're good for the rest of the week then. It's individual, Zach, the tick chart. It certainly works fine. I like the tick chart. The issue I have with many of our clients, literally thousands, use TD Ameritrade for the data feed. And when you have TD as your futures data feed, they won't allow a tick chart, TD. So I don't want to introduce something or tell somebody to use something and then, half our clients can't use it. But you certainly can if you're using like NinjaTrader or a different data source. If you do want to use that, I favor a 500, 500 and then 1100 tick. Those are what I like, and you can adjust it to whatever you do. But I like a 500, slash 1100 for 2 time frames on a chart. If you like to use that, I'm not saying you have to, or I'm not, But if somebody does want it, check that out, see what you think. We of course exit on the red. We're long again right here. This one worked out quite nice. Double green, and then we'll stop out right there. So that was about a 10-point winner. Again, a no trade zone that kept us out of this chop, sideways chop. Triple agreement there. Need that big arrow. I'm always looking at the big arrow. That's what's so important. I lost about 5 points on that trade. Another no trade zone. Again, triple agreement trade right there. And second lower row, we'll do dots. Lost about 6 points on that trade. So notice the losses, 5 to 10 points. The winners 10 to could be 100 points. Triple agreement short would be, again, look at that. There we go. There's that long bar. Just avoid those long bars. Personally, I would wait till the next bar. Wait till you get in on a shorter bar. If you miss it, so be it. It's very unlikely on a long bar when everybody's piling in short at the same time. It's unlikely that it's going to continue to go lower. The same way when you get a long blue bar, like right there. Here's even a longer one. It's unlikely it's going to go higher. This is right at the end of the day. You might or might not take one. It's literally 5 minutes before the close. But this trade here would have been a losing trade too. My sweet spot indicator did not get us in here. Did not get us in here. I definitely going to show that. I'm definitely going to show that next week. I tested it enough over the last month to like what I see. Yes, it might miss an occasional good one, but for missing maybe one occasional good one, it's keeping us out of like 4 or 5 what would have been losing trades. So I like that ratio a lot, and I think you'll like what you see. Yeah, Alan, stay away from the long bars. Yes, sir. Alan's saying, oh yes, I totally agree. I do this every day. The nice part of trading with AbleTrend, Alan says, it allows you to reflect on all your trades after the close. That's right, because once the bar closes, it will never, ever change again. As far as the 2-minute or 3-minute flashing, Drew, that's easy to rectify. Like I always say, wait. If the bar closes, here's a good example. It could have been flashing right here. As long as the bar closes under the blue arrows, which is 3-minute support, take the trade. That's simple enough. You take the trade. At that time, even if it flashes and the 3-minute, because it has 3 minutes to decide, if the price goes up and the 3-minute arrow comes off, you take your trade off. You could take your trade off. Your call at that point, I would simply take the trade off. So this way, if it's a losing trade, it would be a very small loss. But if the price closes under the blue arrow and you have triple confirmation at that time, it's a valid trade. Take the trade. For a long trade, it could have been, like here's a good example. You get when you go from a 3-minute a red arrow, 3-minute, to a blue arrow, sometimes it teeters. You're right on the cusp of the software, tipping to a blue or a red arrow. If the price closes like it did right here, that's why we use open, high, low, close bars. If the price closes like right there, closed above the red arrows, and you had triple confirmation at that time, take the trade. If it turns around, it goes the other way, and it pops off, you simply exit the trade. And if you do, it's always going to be a small loss. So that's the way you would handle that. So I showed you the longer term, like for stock charts, for swing or position trading. You got the shorter term for the NQ. The RTY has been a lot smoother and a lot less choppy, a lot more profitable, especially when the VIX is low like this. Don't hesitate to look at the RTY, the Russell, because it's simply been less choppy. It's been smoother. So feel free to take a look at that, especially if you feel like you're getting chopped up a little bit on the NQ. I also like when the NQ and the ES are in agreement. Now, they don't have to be to take an NQ trade, but if by chance they happen to be opposite, it doesn't happen often because so many of the stocks in NQ are in ES. But if by any chance you have a 1 minute, 2 minute, and 3 minute red on the NQ, but you happen to have 1 minute, 2 minute blue on ES, don't take the trade. Don't take the NQ trade. Because it 90% of the time it won't work out. Otherwise, I think you're good to go here. Great day yesterday. Oh, just an okay day today, because there was some choppiness, especially in the afternoon. But if we can, you'll see. I think you'll find the sweet spot indicator is going to be real helpful to avoid some potential losing sweet spot. Like for example, that was not a trade on the sweet spot indicator. And that would have been okay. That would have kept us out of some trouble. So I think you'll find that helpful. I'll show that next week. I think I feel comfortable enough to say that I think it's helpful enough to avoid some losing sweet spot trades. Losing, we'll avoid more losers than we'll miss out on winners. So it's very conservative. In fact, it doesn't take many sweet spots. It kind of blocks out most of them. I think you'll find that it's real helpful. And of course, yes, Steve, you're right. It was earnings reports this week. You got a very low VIX and you're at all-time highs. When the market's at all-time highs plus a low VIX, it's not usually a good environment for day trading. Not a good combination in general. Yeah, we've had some good days like yesterday. Monday was a very good day also, very, very big winning day. Tuesday was just okay. Today, just okay. No losing days so far this week. That's a good thing. But I think you'll find it helpful, and I'm always here to help too. Feel free to call me directly and go over anything, any questions that you have. It's so much easier and so much more helpful. So much easier to do technical support when you're speaking to someone versus through email, which is impossible. So feel free to call. I'll gladly help you one-on-one, and I think you'll find that that'll work out well. So thanks for being here, everyone. I hope that this was helpful. Stay in touch, and we'll stay safe, and we'll see you back here next week.